Hello traders, this is Ala Peters, founder of Alpha Wave Trader Method. In this webinar, I will be sharing with you what Alpha Wave Trader Method all about. And more than anything, I look forward to the final portion of the webinar, which is me answering your questions. So pretty please prepare the instrument of your choice and time frame of your choice. For example, Apple Monthly, Silver Daily, and any major stocks. I promise you I will not bore you. I promise you it will be quite informative. In the first about 20 minutes, I will share with you what Alpha Wave Trader Method all about. Hopefully you see trading room invitation in front of you for the next week, Monday through Thursday. So let's start. It is essential and crucial to recognize risks involved in trading. So please read US government required disclaimers before you ever start trading and before you ever involved in any kind of financial transactions. What makes Alpha Wave Trader Method so unique and different? Until 2008, I thought life was pink and flawless. I was extremely naive. I was trading on fundamentals and I was investing heavily in real estate. 2008 was a wake-up call. Stocks that were bread and butter were collapsing exponentially despite very solid fundamentals. In 2008, I had nothing better to do but start questioning, why was this happening? How could stocks that have such solid fundamentals fail so powerfully? There had to be so much more to the story. I started spending time with charts. There was not much else to do, questioning what was happening in the markets. And I started recognizing that price is perfect. That price keeps repeating the same dance time and time again. If you were present in trading room today for FOMC, we had incredible fun. I completed video recording of FOMC release and 2 bullish trades on S&P that played out from this reversal zone. Take a look at these levels. Levels in front of you are Alpha Wave Trader proprietary Fibonacci levels. I developed after studying price and continue studying price today, more than 7 years later. I developed about 24 strategies. More and more time I spend with price, more I recognize the perfection of its dance that it keeps repeating daily. If you were in trading room or if you browse social media, when you come to the website, if you go to YouTube channel or the blog, you could see extremely clearly that my bias remains firmly bullish this entire week. This entire week I was spelling out, and since the end of August on daily chart, which we will take a look next, bias remains firmly bullish. Keep your fingers crossed that S&P will collapse to reversal zone. If that will happen, this is where we will be looking to take long. And magic has happened. Price collapsed all the way to reversal zone few minutes after FOMC release. And this is exactly where, if rules are met, you take a long trade. And this is exactly what has happened on S&P right after FOMC release. Video posted on YouTube, and tomorrow morning will be posted on the blog. So, this is proprietary Fibonacci levels, all spelled out by the price far in advance. And this is where S&P had staged flawless 40 points reversal. So take a look at this formula. As you can see each and every time, it doesn't matter what you trade. Take a look. This is Apple monthly, all spelled out by Alpha Wave Trader method since 2013. That bullish rally on Apple will end at reversal zone. All spelled out on S&P monthly as posted on social media for years. When price will come to reversal zone, it's a good idea to get out of all the positions in the markets. Price will do two things. First, bearish correction and then reversal. The formations you witnessed on S&P in the last months had been completely expected. Bearish correction that started in November of last year picked up this steam, but this level had never been broken. Correct? What is monthly chart is telling me right now? We're only in bullish correction. What would be the key response? Not far off from reversal zone. Are we going to see more powerful selling pressure? This is ultimate brick wall on S&P monthly. This is ultimate brick wall on Apple monthly. Good idea to adjust your trail, and very good idea to never ever 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 acquire position on Apple at reversal zone. And very good idea to enjoy flawless rally on S&P if you know the rules on hourly chart. Agree? And this is exactly what happened. Buyers picked up this steam from this level as expected, all spelled out by the price since a couple of days ago on hourly chart. And this is how I ended up developing my own method that is highly accurate. Method applies to any instrument and any time frame, as price the same everywhere. The only thing that's different about price is liquidity and volatility. If I will remove and not show you the name on the instrument, I will ask you in just a second and quiz you what instrument is that and what chart are you seeing. Is this silver weekly? Is this DAX 1 minute chart? Or is this oil 2 minute chart? It's all the same formula. It doesn't matter what you trade. Price is the same everywhere. So once you learn how to trade price and Fibonacci, you can trade any instrument and any time frame. Price and Fibonacci is not delayed. Price and Fibonacci spells out all the levels far in advance. Risk management is different between different instruments, but everything else is absolutely the same, no difference whatsoever. Rules the same, Fibonacci levels the same. Psychology and risk management is different, and that will forever remain the key. And that is the only thing that you have to identify when you come to the markets. Are you a day trader? Or you position forex trader? Or you an option trader? Choice is yours. And as students share on website, they trade anything. Tomorrow I'm meeting with one of our option traders. As you can hear and learn, students trade anything. Choice is yours. Options, stocks, or futures, or all together, because you just love trading. Or is it DAX and oil? Formula remains the same. Your choice, what you would like to trade. As price the same everywhere. So if you found the method that works, it should work on any instrument and any time frame. No software, no indicators of any kind involved in alpha wave trader method. Simple price for entry and Fibonacci for exits. Enter trade using market structure, exit trade using Fibonacci levels. This is what I will be teaching tomorrow in Fibonacci class. I will be unraveling the magic, showing you that S&P spelled out this rally since 2009. If you knew the rules and if you're an option trader, you've taken advantage of this rally from very inception. And this is the opportunity you're witnessing playing out on monthly and yearly charts only every 5 to 8 years. But formula remains the same, as price remains the same. You want to trade monthly or you want to trade 1 minute chart? It's your choice. Why in the world do I never use indicators? Not anymore. When I encountered the world of day trading, when I came to day trading jungle, I jumped all over indicators. It looked so perfect, it looked so easy. Brighter and more colorful the indicators are, easier it looks to trade. But what was happening? Every single indicator I've ever tried looked so perfect after the fact. No indicator on the planet was able to show me where the price will head. Where is it the perfect place to exit the trade? Fibonacci tells you this far in advance. When you browse the charts with indicators, they look perfect, but they not give you forecast where to exit the position. Take a look on the library of previous trades as posted on social media for years. Here's an example, Euro 2014. What do you see has happened on Euro at reversal zone? 3,800 social media posts since 2014. Take a look at this puzzle and we'll take a look on Euro today and we'll show you what I'm expecting on Euro. Price came to reversal zone, correct? Where's Euro today? Is Euro anywhere near 3,800? The crucial rule you learn in the course. Price comes to reversal zone, you exiting your long position and you never get tempted to acquire a long position. Not something you ever should do. If you entering position into alpha wave trader proprietary Fibonacci reversal zone, your success rate 20%. Short on Euro from 3,800 with major obstacle at 3,400. Why in the world 3,400 was such an obstacle? I will let Apple Weekly answer that story in just a second, just like I will let S&P Hourly to answer that story. Take a look. This is the end of the minor trend on S&P in overnight session. This morning I spelled out clearly, you have to be very, very silly to short near this level. We witnessed this ultimate war zone and we took the only one long trade from this level. Looks familiar? 7-hour brutal fight, and this morning the only long trade from this level. Never ever 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 disrespect decision point 1, the end of the minor trend. Correct? S&P hourly. Let's take a look on euro and in just a second Apple. This was the war zone on euro in 2013. Price struggled for about 2 months, 8 weeks to break through this level. Euro had done exact same thing at this level to the downside while I was on vacation. Months and a half euro was struggling. When this level was broken, you witnessed exponential collapse on euro. Correct? That pure and that simple. Take a look on oil. Oil collapsed completely from this area. Short on oil from 108. Once oil broke through 94.79, everything goes out the window. This was the end of the minor trend on oil. So, here's the real story. Retired Exxon executive stayed in his account. He never exited his retirement account. And that's a kind of story that breaks my heart. You will benefit from Fibonacci levels forever. Everything has price, everything has Fibonacci levels. We'll take a look where euro and oil today. And here's Apple. End of minor trend on weekly. Clear? I spelled out. Currently to the downside. Bullish response 123 and 110 are the key. Clear? Never ever 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 enter into the end of the minor trend. What chart you trade is up to you. And here's very crucial reminder. Bank of America reversal zone 2015. Received thank you emails from traders who were long Bank of America. And here is Amazon, complete collapse. Very crucial reminder. Trading is all about not being tempted and never ever 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 acquiring position at reversal zone. And again and again and again. I will find in a couple of minutes before the close of the webinar of the trading of today's FOMC from reversal zone. Each and every time the same formula, and this is exactly the reason you're witnessing what you're seeing currently on S&P. Never short into reversal zone. Buyers are waiting. Buyers already pushed up from this area for 6 points. But this is a major obstacle, the end of the minor trend to the upside. Just like decision point 1, the end of the minor trend to the downside. Price is absolutely perfect if you just respect the rules. If you just remove all the indicators from your chart, you'll be amazed how much you see. Last indicator I've ever used was moving averages crossovers, which are flawless and perfect in trending markets. Trending markets occur only 20% of the time. 30 to 40% of the time, markets dance in endless correction. Did you get out of the markets? Did you walk away from computer? When we closed the trading room this morning, when I said you have to be very silly to babysit corrections. You will be so much happier if you just learn when to walk away from computer when market in correction. As a trader, it's essential to recognize 30 to 40% of the time you are best to walk away from computer. Nothing good happens if you babysit corrections. My S&P had been playing out in correction on one of my favorite charts as I trade only Fibonacci numbers. Take a look at this. Almost 24 hours of corrective fluff. Worthless fluff. In Alpha Wave Trader course, there is a mantra. Market gives you flappuccino? You better go get cappuccino. No reason to be tortured. And that's the reason moving average is not happiness during consolidation. By the time you enter long, you're supposed to take short and vice versa. 30 to 40% of the time, knowledge is the key. Trading with indicators that works only 20% of the time is not a good idea. When I work with mentoring students, I log in into your computer. And I would like to see what you've done before you came to Alpha Wave Trader course. This is real story from trader who's been in the markets for 20 years, investing more than $400,000 in indicators. So I said, Jim, pretty please, let me see. What did you invest into for the last 20 years? I stopped counting after 9 indicators. How can you learn the price? How can you learn the markets when your investment into delayed something else than price? As every single indicator shows you what price did after the fact. No indicator on the planet will ever show you where price heading to. So, let's take a look what we are expecting on other instruments very, very shortly. So I encourage you pretty please, prepare the instrument you would like me to analyze with time frame posted next to you. No minor stocks, please. Magic of the market unravels in front of you. This is a chart that shows you everything you need to know. When traders come to me and say, how do you know the volume? Simple, it's in front of you. How do you know when to stay out? It's in front of you. Price tells you everything you need to know. And it doesn't matter if you trade 1 minute chart or if you trade yearly or monthly charts. Apple, monthly now. What is my expectation on Apple? Apple in bearish correction only. Yesterday I was in a meeting with a manager who invested already in Apple. Bad idea. This is crucial resistance level. 120 on Apple. This is key. Buyers are drastically weaker than sellers. What am I expecting? Further downside pressure to this level. If you're investing in Apple, you know the rules. And if you know the rules, what is Apple telling me right now? That it will collapse if this level is broken to here and potentially here. Collapse on Apple is not done. We're only in bullish correction. Clear? Pretty please ask when I'm done with presentation so I don't have to scroll back and forth. I simply see that a lot of people arrived late due to technical issues, and I look forward answering your questions very, very shortly. So, no conflicting signals whatsoever if you use Fibonacci levels. No conflicting signals or delayed signals if you know the rules. I'm absolutely mesmerized by Fibonacci. What is Fibonacci? Fibonacci is the mystery that surrounds us, that shows that everything around us has perfect formula. Did you ever question when you look in the mirror, why is your face so perfectly symmetrical? Same symmetry found in price. Did you ever question when you look at the flowers why every flower is so perfectly symmetrical? Same perfect symmetry found in the price. More time I spend with price, more I recognize how perfect price really is. In Alpha Wave Trader method, we only use Fibonacci numbers. This golden ratio is the key. If you know the rules and you know trend inception, that's all you ever need to know. No reason to make trading complicated. And here is the principle of Alpha Wave Trader method. This is what I teach tomorrow in Fibonacci class. Always and forever enjoy the ride of wave 1. The most powerful place to be is the inception of the trend. We've done that on S&P from reversal zone for 40 points. When we started webinar, I had shown you, pay attention, S&P at reversal zone. And do not ever ignore the end of the minor trend to the upside. Will S&P stage exact same 40-point rally? I don't know. All I can do is respect the levels from here to here. No long entry near this level, not anywhere near 1980.75. We've taken advantage of wave 1. I'll find the video very shortly before the close of the webinar on our YouTube library. The link to YouTube library posted in front of you in just a second. You can witness library of videos going back for years. So, what is crucial to know? When to stay out of the markets. When price gives you wave 2 and you're trading wave 2, you are very aggressive counter trend trader. Knowledgeable trader has no interest in that. Knowledgeable trader interested in power. If you're interested in power, you had been shorting Apple, not buying Apple. Short on Apple based on Alpha Wave Trader method from 130 area. Worst case scenario from 125. You are not buying Apple now. Doesn't matter. If you day trader, doesn't matter if you buy Apple once every 10 years. Fundamentals mean nothing to me if they are not supported by the price. If you were in the room during oil news, you saw what happened this week. Time and time again, I always remind you, everything preset in price far in advance. Just like everything being preset on S&P daily, showing us S&P is heading to here. This is where the end of the minor trend will be. This is where ultimate test will happen. Will bullish trend mean really serious business? Really? Will it find enough juice to blast through? You will never be buying near this level. And if you're an option trader, like 20% of the graduates are, you've been long on S&P from late August. And that's the magic of the price. And that's where S&P is heading next to. Not without retracements, absolutely, but as posted on social media and as described in trading room time and time again. This is where S&P is heading to. Monitor for Alpha Wave Trader rules that will identify if this is the end of the minor trend. If not, S&P will head further up, but one step at a time. This is the key level. Second, after you stay out of wave 2, you're very much interested in wave 3. Wave 3 is the most powerful wave in the markets. Wave 3 is always present, always and forever. Never ever forget that. Lastly, never ever get tempted and buy at the end of wave 3. You entering into the brick wall. Very crucial and very essential to remember that. Here's an example. If you shorted S&P this morning into this level, ouch, bad idea, end of wave 3. Bearish trend is minor. When trend is minor, we have only 3 wave formations. You have no interest shorting anywhere near. And as I've been warning you, buyers mean serious business. Remain long. And we took S&P up. So, only about 20% of the time you get lucky if you're acquiring position into Fibonacci levels. Make sense? So here's example, here's Euro daily. This is what's happening on Euro currently. And I will gladly take a look on Euro monthly and yearly as Euro heading into oblivion. Sorry for those of you who are outside of US. Euro is only in correction when it comes to monthly and yearly charts. But here's an example, Euro daily. This is where sellers came from. Correct? Decision point 2. And here's the selling pressure from the end of the minor trend. Clear? After the selling pressure was completed, buyers gave you another opportunity to re-enter. And they picked up this steam. How many days had Euro seen selling pressure not far off from this level? Reminding you, if you're buying Euro, you're buying as low as possible. You never enter near. By the time you come near this level, you are in significant profit. Right now, buyers on Euro show me Euro is heading to 1500. And that's Euro daily. All the same formula. If you trade ETFs yearly or DAX 1-minute chart, it all remains the same. Risk management and trader psychology remains different. This is the structure of major trend. This is crucial and flawless major trend dance. 5 waves. And this is all the price does each and every time. 3 dance, minor trend, 5 waves, major trend. No need to make trading complicated. This is Nasdaq. Here is the structure of ranging markets. If you trade ranging markets, you must know limitations. You must respect that price is giving you very small targets. If price is giving you 2-point range, you can be catching 20 points rallies. If price is showing you reversal zone at 1.5 point, you must respect that. You can be catching 5 points rally if you have a reversal zone in front of you. Trading markets occur 20% of the time, unless you trade DAX or oil. Unless you trade low liquidity instruments, that would be the only reason you would have drastically more powerful trading markets. And if you do, you simply enjoy more powerful rallies. So here it is in a nutshell, alpha wave trader method again. This remains the most crucial wave, wave 3. We always enjoy the inception of this structure, whenever acquiring position at the end of wave 3. And this picture is very powerful reminder how dangerous it is to acquire a trade so late. If you witnessed this morning on S&P, after FOMC release, I warned everybody, you do not want to buy S&P in this area. Those of you who were in a trading room saw that clearly. I said the worst idea ever. I have no interest re-entering another trade. What did you see happen? is completely expected. No surprise there. Agree? Absolutely crucial and absolutely essential to know that. So here's Alpha Wave Trader YouTube channel, and you could see FOMC is posted here already. So I highly encourage you, it's been posted as of an hour ago, to review the library and to take a look at the dates, so you could see that all the levels and all the targets spelled out far in advance. Yes, this session is recorded and will be posted on YouTube library as well as blog. So, we're almost done and I look forward answering your questions. Here's exact same example except to the downside. What do you see that has happened to the downside? Let's go back to that screenshot. I'm not ready for euro. Let's go back. What happens if you entering to the downside at the end of wave 3? Not a good idea. Never, ever, ever, ever catch the end of the trend. And the trend will tempt you highly. And this is when surprise comes. Just like S&P hourly at reversal zone. If you short it at these levels, nothing good happens. So, few more examples and I look forward answering your questions. Here's Fibonacci levels in front of you. Here's euro 3-minute chart showing you how dangerous it is to acquire position at the end of the minor trend. Correct? Very clear and very precise reminder. Absolute reversal. Here's a few more examples. Oil, if you're trading oil, you are an accomplished trader. I don't show that in the webinar. I show that in education room. This is very crucial reminder. Respect Fibonacci levels and play by the rules. Very, very choppy structure on oil and very crucial Fibonacci levels. And here's Google. 1 minute. Flawless, major trend, bullish structure. Only 20% of the time price make it to that level. If you do not understand the structure, you have a lot to learn. Flawless. It doesn't get any better than that. It doesn't get any cleaner than that. Flawless, stunning structure, flawless, perfect trading. In summary, Alpha Wave Trader method based on two concepts: pure price for entry, Fibonacci for exits. No software, no indicators of any kind. Method applies to any instrument, any time frame, any platform. I work with traders from Dubai to Beirut to Israel to South Africa who trade instruments and platforms I've never heard of. Right now we have student from Singapore who is quoting instruments I've never heard of. What you trade is up to you. Price remains firmly the same. I've never seen a platform that does not have Fibonacci tool. Every single platform does. All you need to know is rules and key levels. I constantly develop new strategies. I teach bootcamp a couple of times a year. Every time I develop a strategy, I teach new strategies to the graduates of the course, but only if you want to learn more. When you come to the website, important levels and important parts to review. If you click on About page, you can learn a lot about Alpha Wave Trader method. My favorite page, if you could see, I love to travel and I love to meet our students. Here's a couple of pictures. This is one of our exceptional traders, Carol. She's in Dallas. She's very serious oil and S&P trader, as of right now. After finishing course very recently, expecting grandbaby, as soon as she has one, we're meeting in California. Here is me meeting our graduates in New York. Serge and William. William and I met multiple times. Here is Michael, incredible DAX trader, with his family. Just recently moved to New Hampshire. Here is Catherine, with me, our phenomenal DAX trader and option trader. So, real people, real stories, and here's me in Singapore. Travel all the time, love meeting graduates in 2012. So, further up, if you would like to learn the method, pretty please browse education course info. And second favorite time is this orange section. Audio testimonies from our students. We have very close community. Our students love to speak with our other traders. Always open to share. So, if you ever would like to contact me, all you have to do is click on Contact Us. And you can always send me email or call me. info@alphawavetrader.com or 925-257-4298. So if you would like to learn, I highly encourage you. Browse the info. We start the class from scratch on Monday. Friday I teach very important Fibonacci class. Over the weekend you have time and opportunity to browse manual and modules which are available to you throughout the course online. Group education is 8 weeks, private mentoring is 16. We meet daily. We're meeting very early, like the last few days we've been meeting at 8:20 EST. We analyze the markets, we have major news, we trade together well before trading room open, and we stay into markets close time and time again. Private mentoring, you have access to all the group sessions. We meet one-on-one via screen sharing. We concentrate on the instrument of your choice with annual follow-up. Private mentees become my dear friends. And that's it. I have questions from students time and time again. Can I start and stop the course? Not a problem. Second question I get all the time, how long does it take to learn? It's up to you. How much experience do you have? Right now I work with mentee who never placed one trade in his life, as well as I work with institutional traders. So, you make an effort, you can learn. Can you learn 4 rules? Can you do the homework? I love the fact when students sending me homework. That remains the key. Here is one of the homework. I have about 60 screenshots to get through. That I love. This is the email from one student. Just received. This is the magic. This is how I love to see the homework. Netflix, PCLN, and S&P. Here is another homework from another student. Here it is. Totally different. Correct? Choice is yours, what you would like to trade. So, you have to start the course, you have to stop the course, never a problem. 10% of the students learn everything within first class. The other 80% learn everything within a couple of weeks. If you make an effort, there is no reason why not to. I encourage you to send me homework. I love to see the effort. Top graduates of the course send me about 900 screenshots. About 10% of the students never send me any. You are not required to send me homework. That's also the question I received time and time again. This is the homework from student whose father brought him to the course, which also happening all the time. So, this is all I have for today. I look forward to answering your questions. Pretty please let me know. I will scroll back up which instruments to analyze. So what I would like to do, I would like to upload the instruments into my tool manager. So let me see what we have, and then I will go straight for answers. Let me scroll back up. Again, if it's not a major stock, I will not have data. I have data on major stocks only, as you know. Number of stocks is exponential. So let's go to stocks. I see a number of questions on stocks. Amazon is easy. Coming up. If you did not post the time frame you would like me to analyze, I will pick the first available. I'm honestly not so sure that I would have Twitter. What is the abbreviation for Twitter? Tesla, anytime. Twitter? I don't believe Twitter is major instrument. There is no Twitter that I can see under major stocks. Next question on Dow. Are you asking me index or you asking me future? Dow coming up. Never confuse the two. Dow index coming up. Silver and pound. Any other questions? Pretty please do post. Has nothing to do with Elliott wave. Word wave does not mean Elliott wave. Price always has the wave. We're talking about Fibonacci waves. 15 to 20% of the gradients come from Elliott wave background. Elliott wave is subjective and speculative. Alpha wave trader method is firm and precise. Nothing in common. Not interested in subjective speculative formula. Never heard of Elliott wave unless my students told me. Subjective speculative, nothing in common. That's all I know. Word wave means surf. Word wave means a lot of things. Does not mean Elliott wave. Never, ever, ever. So, Ford and dollar. Ford, the abbreviation for Ford is, we're going back to stocks. Let's wrap up the stocks because I have to go back and forth between them. We are on stocks. Any questions about indices? We're gonna go to futures. Ford, what is the symbol for Ford, please? F? Thank you. Come on, let's go to Ford. Ford, done. Next question, I also remember about pound dollar. DX, are we looking on index? DNR, is that the stock? DNR? Done. Marvelous. Done. Gwenser. I currently have mentee in Berlin. TQQQ, is that the stock, please? Guys, we are on the stocks, correct? It's not a major stock. Major stocks, please. You plot levels on any chart. I had shown you monthly, I had shown you weekly, I had shown you hourly, I had shown you any chart. Correct? You choose what you want to trade. I'm not using standard Fibonacci levels, period. Have nothing to do with it. I don't have ETF, Nick. DX is a dollar index, please. Pulling up DX, pulling down pound, and we're going to analysis. Is DX dollar index? What is DX, please? Going to pound dollar. So pretty please post the time frame next to the instrument. I will browse back if you already posted. So there is no ETF, Nick. There is no data on ETFs. I don't have data on ETFs. So let's go to analysis, and if you have any other questions, pretty please do post and I will gladly answer. I will go in alphabetical structure. Pound dollar coming up first. Pound dollar. What time frame, please? Pound dollar 1 hour. Love it. Pound dollar 1 hour coming up. First of all, I would like to show you where rally on pound dollar came from. Let's take a look on pound dollar structure. Alan, this is for you. We're not looking on daily, we're looking on hourly. Bounce came from the end of the minor trend as expected, correct? Everybody is seeing this? Once price broke through the end of the minor trend, sell-off continued with vengeance until reversal zone. You know the rules, you monitor for long. Clear? Let me show you where pound dollar is and what will happen next on pound dollar. That reversed from reversal zone as expected. You witness that you should never short into it, correct? Agree? So this is where pound dollar is currently on hourly chart. So, last chance to buy pound dollar 5,500. You are never acquiring a position near this level. Bullish rally overextended and seeing selling pressure. If you know the rules and price will collapse to 5,500, it's a beautiful place to buy. If price is anywhere near here, you are staying out of the markets. Clear? This level is broken, price will continue to here. This level is broken, price will continue to this level. You trading Forex, make sure you add the spread. Agree? Pound dollar hourly. Buying opportunity 5,500 area. If price will retrace that low, you are very lucky. Because frankly, bullish trend means serious business. Frankly, you know the rules. Bullish trend is telling me that this level will be broken. And it's highly unlikely that price will collapse down to 5,500. 90% chance price will blast through this level and continue further up. Sellers are extremely weak. It's only bearish correction. Highly unlikely selling will continue down to 5,500. Next question was Dow Jones. No, Amazon coming up next, loading the data. What is the time frame on Amazon, please? What is the time frame on Amazon, traders? Daily, love it. Let's go on Amazon daily. What a painful, painful chart. I will tell you one of my tricks. Here is one of my tricks. Why in the world I never use daily chart? Here's an example, trading 101, and why I never use standard Fibonacci levels. Do you see I never use daily? Do you know how many option traders come to me and their results improved exponentially? Why in the world do I not use daily chart? Take a look. I only use 14-40-minute chart. Look on the structure in front of you. It's flawless, perfect dance. Look on the structure now. I'm changing to daily. It's junk. Run. it's full of gaps. This is completely inaccurate. Knowledgeable trader never ever ever touches this chart. Knowledgeable trader needs every single second in the market, as Fibonacci loves every move. Never ever 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 use word daily. Always and forever use only 40-minute chart. You already learned one of my tricks. So, here's Amzn daily chart. Here's the precision of alpha wave trader method. Let's talk about what happened on Amzn and what will happen next. Did you know to get out at this level? The answer is no, you have a lot to learn. And pay attention to the fight to the upside. How many days did Amzn struggle through this level? Nick, a very peculiar question. You use it any way you want. Upside, downside, sideways, anyways. Price is telling you where to use it. Amzn struggled for days, blasted through. Agree? Complete collapse as expected from reversal zone. What to expect? Exact same thing. Do not acquire position anywhere near here. That's Amzn. Very weak buying power. You're gonna start seeing serious selling pressure potentially as early as tomorrow. This is not the time to acquire position. By the time you come anywhere near these levels, you are in significant profit. Next questions, and forgive me if we're gonna run out of time. Next question was on DHR. DHR, what a low liquidity. Pretty please tell me something about DHR. What chart? Daily? DHR daily? What chart please? Daily again? One hour. So much better. Thank you. I was getting worried about you. You don't want to trade that daily. Ouch. It's extremely low liquidity stock. Tell me why you're trading it, Gunther. When students come to me, that's always my first question. I'm always curious. Why did you choose DHR? What is special about this stock? Here's DHR hourly. Low price to book. It's very low liquidity instrument. You gotta be extremely careful. It's very easy manipulated. You see reversal from reversal zone and dance at Fibonacci low. Correct? Would like to show you a reminder and similarity. S&P monthly, decision point 2, bounce. Correct? DHR, decision point 2. You are sitting at very powerful support. Bias is firmly bearish right now, but we are expecting bullish pullbacks. Absolutely expecting bullish pullbacks, just like played out on S&P monthly. This is very powerful support. I will answer all the instruments I uploaded already, as we are completely out of time. Next, Ford. Ford, what time frame please on Ford? Question on Ford. 60 minutes. Here's Ford, and here's your 20% success rate. And very powerful reminder, never ever 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 get tempted and buy in reversal zone. Market gives you trend at reversal zone. You do not touch the market unless you have a short opportunity. Correct? What is Ford telling me right now? We are in bearish correction. What is smart thing to do with Ford? Stay out. Can the sellers pick up this team at any moment? Yes, they can. Correction can become reversal. If that will happen, price will collapse to here. You know the rules. You know what to monitor for, as it's essential and crucial to separate correction from reversal. What Ford is doing right now is exact same thing S&P had done. First correction and then reversal. And this is potentially what Ford may do. If Ford will collapse to here, and you know the rules, you may see pretty impressive reversal. And I believe this is all I loaded on my data. So, I promise you I will answer your question about Euro. I see quite a few Forex traders. If you are as crazy about the world as I am, and if you are as passionate about travel as I am, here's what I'm projecting on Euro and Pound for that matter for the next few years, as posted on social media forever, as I will be teaching in Fibonacci class how to identify tomorrow. Where is the buyers coming from on Euro? Shocker, not. The end of the minor trend. This is only bullish correction. Buyers will not go on forever. In the next few years, we poor Americans are not gonna be so poor. This level price can continue chopping, but just like on oil. I will gladly bring up and screenshot and will remind you what happened on oil. Once this level is broken, price will head to here. This is the end of the minor trend. It's only bullish correction. Once 84 is broken, price will collapse to here. All spelled out by the price since 2008. And that's the magic of the price and Fibonacci. And let me remind you what happened on oil. Remember where oil collapsed from, correct? Remember what happened at decision point 2? This was bullish rally on oil, correct? Bullish rally in 2011 from the end of the minor trend. The same thing Euro is doing right now. The same thing we took advantage of on S&P this morning. Bullish rally on oil monthly. Once, twice 2012. Once this level is broken, price is heading into oblivion. Where is oil dancing right now? Simple. Reversal zone. If oil is blasting through this level, bullish rally will continue to here. Right now we are in bullish correction. It's not the place or time to short oil. All spelled out by the price since 2008. Magic unraveled in Fibonacci class tomorrow morning. I'm always open to hear from you. Thank you so much for your time. Phone number and link posted in front of you. Trading room invitation will follow first thing Monday morning. Trading room opening up 9:30 EST. Please arrive on time. Any questions? Always feel free to email and call me. Thank you, traders. Thank you so much. Have a joy-filled weekend, and remember, if you decide to join us in education, you will be in Fibonacci class tomorrow at 11 a.m. EST. Any other questions? Always look forward hearing you. Thank you, thank you, thank you so much, traders. My pleasure, Gunther. Love Frankfurt was there a couple of weeks ago. Take care so much. My pleasure, Michael. Thank you, thank you, thank you, traders. Bye bye.